on how to execute like a pro in the higher time frame. Yeah. Um, so how to position yourself now to execute the lower time frame like a pro when look at the higher time frame. Remember, guys, I told you guys what I trade here. I trade the PSE model. The EP now stands for position, the X stands for sequence, and the E stands for entry. Now I'm going to continue this topic in respect to the previous topic where I showed you guys just one example now on CHF JPY. So the topic still remain on positioning. I'll be doing more of this just theory. I will show you guys chart work too. So let's take for example this daily value area. Okay, now I want to bring something to your attention when it comes to pattern separation. Pattern separation doesn't mean you separating those impulse and correction. So you could separate the structure now. So if we have two levels of inflection point, okay, we have price. This is the 1 hour time frame, 30-minute time frame, 15-minute time frame. That's this upward movement now to our daily area of value. Now let's say these are our inflection points. Now our inflection point now stands as a magnet. As a magnet now, because if this is a daily time frame, we want to trade from point A to point B. Now from point A to point B, at the same time, this could be from this level to from this point again to this particular point. So how do we take advantage of this move? How do we know which is who? How do we know when price have traded to this level is done trading this level, and how do we know that price is going to get to this particular level? Now the inflection point now is going to help now for trade management. Let me just indicate it as inflection points. Inflection points now will help us for trade management. We have another inflection point here. Inflection point here. So I want you guys to follow along with this. I'm going to change the color. Now, if price gets to our daily area of value and we have two inflection points, two reversal points, now we don't know. One thing we don't know is we don't know if once price gets to this place, if it's going to keep going up. Right? Let me get rid of this line here. We're discussing about positioning. Once price gets to this place, now we don't know if it will keep going up or if price will keep coming down. But one thing we are aware of now, we have our inflection point. Now, how do we make profits within this window of opportunity? So what we are looking for now is this. Since we have an inflection point here, once price gets to this point, I could trade a tight flag. Why? Because I could manage it to the downside. Let me change the color of this to, let me make it red, right? Okay, let me remove this one. At that same point, I could either trade, once price drop, I could trade a 3-touch continuation, 1, 2, 3, to this particular point here, right? Let me remove this one too. Okay, these are my windows of opportunity. Within this 3-touch continuation, this 1, 2, 3, we could manage. I'll show you guys what I mean by that. So if I'm trading a tight flag like this on the 5-minute time frame, once price gets to our daily area of value, remember the reason why I'm taking this tight flag now is because we have an inflection point. It means I could manage my trade. If I should take a sell from the top, I don't like taking reduced risk entry. If I should take a sell from the top, yeah, I could manage it all the way to this particular place, because reason being, once price gets to this particular work, it has completed its move, impulse, correction, impulse, right? Now if I'm trading a 3-touch continuation too, I take risk entry at the top. I refine my entry now. My entry now is always at the 5 minutes. We'll talk about entry, but now we're just talking about positioning. Let me Okay, Control Z. Okay, so what I do now is 1, 2, 3, 3 touch continuation. I take my risk entry at the top. I could manage it down to this particular low, this low here, then or all the way to this downside. So what I'm going to do now is let me push this thing a little bit further so know exactly what we're doing. Let me just remove this one. So this, okay, all right. So I could trade a tight flag to the down. It has to be tight from here all the way to the downside. Why? Because once price gets here now, price could just shoot up. Or I could trade from here 1, 2, 3, 1, 2, 3, because once price gets to this particular low, it could just shoot up. So I don't know, right? Okay. So now if we miss this two leg, this one or this one, whatever one that price present now, how do we trade? Where do we look for opportunity to then sell to this place? Does it mean we should start looking for here now to then sell off to the downside? No. If we should look for sales from here, no, that is not going to work. From here to then sell to the downside, it means we don't understand the mechanics of price action, right? So this is what I will do. This is what I will do. Once price gets to this particular low down here, once price gets to this particular low down here, what I'm expecting to see now is if I'm going to trade to this particular place, I'm going to see something like this. Now I'll take this particular one as one section. I want to bring it together. It will be like this now, a V shape, insurance entry. Now my target now is down here. Let me change the color to green. So this is what I'm looking for now. Let me put my red line. Okay, so look at the difference, right? Look at the section. Now let me bring it up like this so everything will be together. Okay. Now notice once price sell off to the downside, this is my management place. And if price start pulling back, I'm not waiting to take a risk entry, maybe if they can't wait. I'm waiting for that insurance entry to then sell it because this is the next junction that price will get to. Let me move this stuff one side so everything will be aligned. So remember the reason why we have this two box now is just to separate that we could either get a tight flag there or we could get a 3-touch continuation to the downside, right? So let me make this one bold. What is the pattern separation? The pattern separation here now is this impulse correction impulse is for this particular section, this one. Now how about this other section, this whole section? So I'm going to change the color of this. How about this whole section? Let me make this thing yellow. Okay, we have the internal section. This is the window of opportunity, impulse correction impulse, tight flag to this inflection point, or a 1, 2, 3 stop, whatever this thing that is happening, we want to sell it all the way to this side. But if that's for just this particular section, you get? But if we're going to sell to this inflection point down here, then we need a different pattern entirely. I'll make this thing bold now. Okay, let me use this too. So what we're looking at here now for this particular level down here, we are looking at this place now is like a hook point, it's like a V shape all the way to the downside. So notice the difference. This one, I'll change the color. This one now is like this, so this low, and no, let me remove it. Yes, let me just remove that stuff so I will not make mistake. Let me use, or maybe I'll use this cycle. Okay, So let's just go back to our former box that we were using. Okay, so I just want you guys to understand this inflection point here now, this impulse correction impulse. I'm selling to this particular place. I'm not looking for any trade below it now to then sell to the downside. It doesn't make sense. Reason being, this could just be a pullback to the upside. So for me to be on a safer side, to trade to this next inflection point, it means I have to trade the larger structure by separating the pattern, by looking for, I'm looking at now is, I'm looking at this place now as a hook point on the 1 hour time frame. It's on the 1 hour time frame, 1 hour time frame. I'm looking at it now as a larger pattern, hook point, price come back. They give me an insurance entry. My entry now is always at the 5 minutes for me to be precise, to then sell it to this next inflection point. Now let's take this one step further. I'm going to end this video at 15 minutes thereabout. Let's say we have another inflection point here now. We have another okay, let's say we'll have another inflection point down here, right? Okay, what would the inflection point down here? How do we sell from here to here? Now this is where your larger structure comes into place. This is another inflection point. So it doesn't, now once price gets to this place, I won't be looking for a small 3 touch continuation. No, that is not going to work to sell to the downside. No, this will move price to this place. What I'm looking for now is a bigger continuation. So this whole leg will serve as, this is where you start seeing something like this, price testing the back end of this. You start seeing something like this, price testing the back end of this particular place, then giving us insurance entry to then either go to the downside or start giving us a kind of 2 touch to then sell off to the downside. Let's change the color to orange. So you could see the layers. Let me do this one. No, don't use that color so it not confuse you guys. So this one now is for, let me do the sell insurance entry somewhere here. So this one is like your 2 touch continuation. So notice the difference now. So this whole move, this is the 2 touch that leads to this particular inflection point down here. So just go back, you guys should go back, watch this video, understand what I'm trying to explain here. In the next video now, I'll start showing you guys chart work now. This video now is like 30 minutes. So the part 3 now will be me showing you guys chart work. Shaya.